Good morning and welcome to Unusual Activity powered by FinancialJuice.com with George Avedon and Milton Marmonides. Thank you for joining us this 12th of February 2015. Certainly lots happening in the market as always. We are pleased to have with us, joining us in about 15 minutes or so, is James Ramelli from KeenOnTheMarket.com. Very excited to have him and have a conversation with him, his perspective on markets and individual securities. So, folks, let's jump into what we're seeing in the markets in pre-market in the U.S. here. We have S&P 500 futures, the ES futures. We have higher by 7.5 handle, 7.5 points at 20.73. Crude oil higher by 88 cents at $49.77. Gold is higher by $5.80 at 1225 and a half. And we have the 10-year smack dab right at 2%, at 2.00, just lower on the yield, 1.998. We've been watching this rather closely, specifically on the 10-year. 5-year maintaining that stance above 1.5 at 1.517, and the 30-year we've seen some volatility as of late, currently at 2.581. The dollar index lower by 0.456. This is the DXY we watch. DXY is the dollar index versus 10 other currencies at 94.528. The euro dollar currently at 1.1360, higher by 0.0053. So certainly action is certainly, we're continuing with the volatility. Lots of information coming out of Europe with respect to Ukraine, with respect to Greece, and so as we hear information, we'll certainly bring that to you folks. So let's jump into what we're keeping an eye on. Certainly from a geopolitical perspective, we keeping an eye on the ISIL situation in the Middle East, obviously. Reports yesterday of Obama and the Congress discussing a limited 3-year time frame for quote-unquote boots on the ground, and we'll see what that actually, when that happens, should that happen, and what kind of parameters are for that. With respect to Saudi Arabia, OPEC, certainly with the recent volatility in oil, we'll certainly keep an eye on that, see if there's any specific commentary coming out of Saudi Arabia and any OPEC and non-OPEC nations. Also from a additionally geopolitical perspective, certainly the Greece situation, the debt situation, awaiting to hear more out of that. Certainly the Ukraine-Russia situation, the apparent ceasefire, and we'll continue to listen for specifics as it relates to the Ukraine-Russia situation. We know that there was an increase in violence as of late, so a bit of pressure on that. So we know that there was a summit in Minsk, and again, once we hear more, we'll certainly pass that along. Let's jump into some economic indicators here. Baltic Dry Index at 540 points falls 2.4%. Folks, this is an indicator that we watch on a daily basis, and we feel that it's important. It's a great indicator to see what kind of shipping activity there is specifically for grains, raw materials. This 540 level is rather low. Even Doug Cass mentioned the Baltic Dry Index a couple of days ago, something that should be really monitored on a daily basis. So we're at rather low levels on this index. We'll get into initial jobless claims this morning were higher than expected at 304,000 versus the 287,000 again expected. Retail sales were lower by 0.80% versus the 0.50% that was expected. So we did have a slight pairing in the futures, but we seem to be coming back to the levels that we were before those numbers. But again, continuing to monitor this rather closely. We are anticipating 9:45 this morning, Bloomberg Consumer Comfort Index, 10 o'clock business inventories, and of course we have the 10:30 EIA natural gas inventories. We know with natural gas currently at 2.795. It's still below that $3 level, but something to keep an eye on rather closely, as a couple of days ago we had that interesting rise in natural gas on the heels of a national weather forecast for the Northeast to be rather frigid over the next few weeks. So we had a little bit of lift in natural gas futures there. So again, currently at 2.789, lower by 0.009. So one of the things that we want to bring out in terms of Greece, Tsipras says very confident that they can find mutually viable solution to heal the wounds of austerity, return Europe to growth. Very interesting to hear commentary, a lot of pundits out there, a lot of opinions out there, and certainly a lot of posturing, and certainly interesting to see what kind of deal we can anticipate from the Greece European Union officials. So some of the themes for the day as we've been monitoring, although the dollar is lower this morning, overall the dollar has been strong as of late. We want to see if that continues, or have we reached a bit of a peak as of late in the U.S. dollar. Euro, certainly volatility as of late, certainly a lot of activity in the Eurozone. Oil volatility continuing, currently at $49.86, up $1. So rather significant moves in oil, and that's something that we'll continue to keep an eye on. And we'll bring Milton in just about 4 minutes to talk about the technicals of that as well. We mentioned we bring up deflation risk, that the D word has entered the lexicon as of late among central bankers. But specifically, we even had a comment from a Fed speaker yesterday commenting on lower than expected inflation, and how they're positioning the quote unquote possible interest rate rise. So again, we're continuing to monitor that. The Greek, what we call the Greek drama. We'll see how that we discussed that. We'll see how that turns out. The Treasury yield curve, that's something that we're keeping an eye on rather closely, as specifically compared to about a year ago or so, and that's something continuing to monitor as well. So the last 4 bullet points there, certainly the Russian economy back in focus. We want to see where the relationship between Russia and the EU, how that progresses. We know that Germany is an economic partner with Russia, certainly, and also we are finishing up earnings season, so we'll get commentary from James Ramelli in a few minutes on what his opinion on earnings. So let's jump into just a few things here. So as oil prices remain low, we want to see what kind of effect that continues to have on the Russian economy, on the ruble, compared to the U.S. dollar, of course. And again, just keeping something in mind as we're watching this geopolitical environment unfold. Keep something in mind on the Russian side. The Putin has a very high approval rating within Russia, clearly, and that's an interesting dynamic to keep in mind. Interesting to again adds a little bit of color. Let's review where we were in Asia overnight. Nikkei was higher by 1.85% at 17,979.72. Hang Seng higher by 0.44% at 24,422.15, and the Shanghai higher by 0.50% at 3173.42. So what we'd like to do, and so take a quick peek at Europe before we get into the technicals. FTSE currently higher by 0.12% at 6826.21. CAC in Paris higher by 1.08%, 4729.70. DAX higher by 1.66% at 10,930.88. IBEX in Spain higher by 2.09 at 10,581.70. So clearly we are higher across the board in Europe. Continuation in we're seeing that in the in S&P 500 futures currently higher by 7.5 handles. So let's bring Milton in for our technical analysis prep for the day. Milt, certainly a lot happening globally, politically, and geopolitically, macroeconomic news as well. What are you seeing out there? What's on your mind this morning?
Well, like we've always been saying, it's about it's all overseas basically. Yeah, Ukraine this morning news, Greece yesterday into today. Now it's gonna go over the weekend into Monday. I believe you had Sweden cut interest rates. I believe it was them this morning. So you're having another country cutting again. So it's, people don't like to use the term currency war, quote unquote, but, I guess that's what it's coming down to in a way, because, was it the 16th or 17th country to cut this year?
Right.
It's going to be interesting to see the outcome of all this down the road, but right now, the markets are still trucking higher. Everything is being washed away. The fear index, I believe someone did a report yesterday, and the fear index is the optimism is at the highest level it's ever been. Everyone, they did a statistic that 85 to 87% were all bullish on the markets. It's all, it's all the same routine that has been since, last year. Everybody is buying the dips, and it's going to continue until it finally unravels. When that happens, who really knows? But as of now, the party train is continuing higher. Everything is being washed away. And clearly the mindset is strength across the board on the U.S. markets and even overseas. A quick update on the tech side. Let's jump onto the ES real quick first. We're looking at resistance levels at the highs. 2079 initial short term, with the highs at the 2088 level as the top level resistance, if you can even call that resistance. Support level, we're looking intraday about the 2065 level. Ideally, that 2050 level is the ideal support. The two numbers, 2079 intraday to 2065 intraday levels on the resistance and support. The ideal levels, upside resistance is the previous high of 2088, and downside support about 2050. We're keeping an eye on that. Volume has slowly dissipated a little bit, the past week or so. So we're going to keep an eye on the volume, see what really happens on that side as well. Oil. What can we say about oil? Oil's up this morning. You're getting this volatility in oil, which traders that have been around for a while have never seen before. You're having 1, 2, 3, 4, 5, 6, 7% moves on an intraday basis. When have we ever seen that? But right now, the levels we're watching on oil. Daily resistance, that 54-55 level, with the support at that 48 number. Touched it yesterday, bounced right off that number, and closed in the mid-range. We're watching that 48 level support on the intraday daily level. The upside resistance are on that 54-55. Intraday numbers that we're watching on oil. Intraday right here, basically 50-50 to 50-51 on the intraday level. with the support around 49.50 intraday levels we mean on the oil. So we're going to watch this. We're watching the oil. We're watching the volume. We're watching the dollar also. Dollar strength, dollar weakness this morning could also affect a positive move in oil. With that being said, excuse me. With that being said, on the dollar we have extreme weakness this morning. I believe it's in fact due to a lot of the retail sales numbers this morning and the initial claims. But the U.S. dollar is weak this morning. Keeping an eye on the strength and weakness on the dollar in correlation with strength and weakness in oil. Right now, we're also keeping an eye on gold. Gold levels that we're watching are the 1200 to 1250 range, 1200 support, 1250 upside resistance. Watching those levels for continuation moves. We were above the 1250 level for a few weeks prior to the break the other day. Once that level was broken, that level now becomes resistance. So 1250 upside resistance, 1200 downside support. Volume is nowhere to be found in gold. Clearly the volume has been slowly leaving this mark in the past week or so. So that's something to also keep an eye on in regards to these recent moves. And lastly, the VIX. Let's talk about the VIX. The VIX is clearly in a range-bound move. 1416 downside support we've been mentioning to that 2021 upside resistance. It's trading back and forth in that range. Once one level is clearly broken, we can have a substantial move to either direction. We're watching both. Once that happens, we will make sure to pass along on the UA forum. As of now, it's trading in that range. Volatility is there, but it's range bound. George?
Milton, thank you so much. Folks, there you have your technical analysis prep for the morning. So now we are very pleased to have with us James Ramelli from keenonthemarket.com. James, good morning.
Good morning. Good to be here.
Thank you so much for joining us.
Thank you for having me.
So please, James, first and foremost, please, give us a little bit of background on you and what you do, and then we'll dive into the market.
Sure thing. Well, like you said there, and thank you for the introduction. My name is James Ramelli, and I'm a trader and moderator here at keenonthemarket.com. And what it is that we do here, our main bread and butter product is our live trading room. So to our subscribers, every single day we offer commentary on the market and the ability for them to watch myself, our head trader, and our other traders trade live during the day while looking at our screens, seeing our chart setups, and hearing our voices as we walk through the trading day with our own capital. Equity options is our main focus, so 95%, probably more like 99% of all my trades are going to be done in the equity options market, combining a number of different strategies, mainly unusual options activity and following institutional order flow, and trading catalyst events like earnings.
Perfect. So, James, we follow options rather closely, as they tend to be quote unquote, let's call it a leading indicator for the underlying equity. Certainly, derivative traders, we're certainly keeping an eye on that. So tell me, let's jump into a little bit of the macro markets this morning. Give us your feel on the future. Certainly, the markets have been range bound. We know that at the same time they've been range bound. Volatility is certainly still in the cards. What's your feel on that? Can we get out of this range? Can we, do you think volatility will continue for quite some time?
Right. I think that it will, and we're range bound, but the range is a pretty wide range in
No
the
doubt.
S&P futures.
No doubt.
I mean, if we take a look, it's almost 100 points wide.
Right.
We've been in this range for a couple of months here. We actually have broken through the top side of that range over the past couple of sessions here, and a nice strong close today, I think, kind of changes things going forward. And at the very least, puts the a takeout of the all-time highs in perspective, because we're only 16, 17 points off of that level right now as it
Right.
is. In the meantime, I haven't really put on any positions, at least in the equity options market, that have reached out further than March expiration, because I know that there's a lot of a confluence of kind of an uncertainty here between Greece situation with ISIS or ISIL, whatever you want to call them, and that I think doesn't really lend itself to taking kind of longer term heavy premium bets in the options market. I want to be really stock specific and more
Hmm.
so focus on stocks that have near term catalyst events. So, for example, I've been really focusing a lot more on earnings trading recently, also because the unusual options activity hasn't really been quite as prevalent as it was, let's say, this time last year, the
Sure.
beginning of the year last year. I think that a lot of traders are kind of sitting on their hands right now and not really willing to put on any really large positions just yet, because at this level, even just looking at the daily chart of the S&P futures, I mean, that just reads as nothing but uncertainty, right?
Right.
Bouncing
Right.
around like a yo-yo inside of this range. But at the same time, with the VIX trading around a 17, it seems high because we're used to 18 months of no volatility, right?
Right. Right.
But if you are someone who knows about the VIX and watches the VIX and has been watching the VIX for a long time, you know that the long run average is right around a 21. So if anything, volatility is back to normal now. And I think a lot of traders kind of got used to this slowly grinding market that just pushes higher every single day
Sure.
in a very orderly fashion. And now with the VIX spiking, we're still in a situation where you can be long the market and buy downside protection without really overpaying, because the VIX at a 17 might seem high, but really historically it's not.
Correct, correct, and I think you hit some really important points here. The I call them market pundits, but everyone picks out these spikes in volatility, but the reality is you have to look at the really months and years of the VIX to really get an idea of where VIX is typically at. And I think that's a very very poignant question for you, James. Is you mentioned watching certainly the geopolitical environment, macroeconomic environment. Should a trader want to position, whether it's the futures, how would it be best to position? Let's say they want to take out a position in the ES. I mean, how would you at least go about positioning a ES position with everything that's going on in the world?
Right. So my answer to that question every single time is going to be use the options.
Mm-hmm.
I can come in and trade the underlying S&P futures here, and if I wanted to get long, there's nothing wrong with that. But I think the statistic, and I might be off by a day or two here, but of the 26 trading days that we've had this year, I think 23 of them have had a move in the S&P of greater than 1%, right?
Right.
So I
Right.
mean, I can put on a position in the futures and cross my fingers and hope that I don't get stopped out in the middle of the night when I'm sleeping. But it's not really the best way to go about it.
Right.
What most people hear the word options and they automatically think about the leverage that's associated with options, and they get scared and they think that it's more risk than trading the underlying. But if I'm setting up good options risk versus reward ratio strategies, I'm actually risking less and using my capital a lot more effectively, and then I don't have to worry about getting stopped out. So I can set up strategies like long call spreads in the SPY, or long call spreads in the S&P futures, long call spreads in the SPX, and not have to worry about getting stopped out on a big move overnight because some news comes out of Europe at 2 in the morning when I'm asleep, right?
Mm-hmm.
I mean, I think that especially for retail trader,
Yeah.
that's the way that you want to be going about this. And the fact that there's such a diversity in products, SPY, S&P futures, SPX, any other number of sector-specific ETFs and index-specific ETFs, there's something that is there that any trader with any amount of money in their account can scale to something that they're comfortable with in terms of risk. So I think that's probably the most efficient way to go about it. I mean, I don't have any positions on right now in the
Mhm.
S&P. I'm very stock specific and have a pretty decent balance of long and short positions in my book. But if I was someone who was a little more passive and just kind of wanted to, throw a broader market long on in the S&P, that would be the way that I wanted to do it.
No, I appreciate that. Thanks, James. You mentioned earnings. Let's get into earnings a little bit. Give us your, at least from a initially macro view, how was the earnings season so far for you? Give us kind of an overview, and then, perhaps we'll get into specific stocks that you're watching this morning.
Right. So I mean, I think that it's been an interesting earnings cycle. The vast majority of the S&P has already reported, and what we're seeing is that they're coming in really strong in terms of revenues and earnings, but the guidance has been relatively soft,
Mm.
and that's something that I think has traders more concerned than anything, is that some of these CEOs in these conference calls are not, as optimistic about the coming quarters through the end of the year as we thought they might be. I mean, with crude oil trading at the level that it is, and it's seen a pretty stiff rally from its lows here. But even at these levels, cheap gas, cheap energy, that should be putting a lot of money back into the pockets of U.S. consumers. So our general expectations going into this earnings cycle was that consumer discretionary names, retail names, would be coming in and reporting solid quarters as they were through the holiday season, and also coming in with solid guidance, because where is that money going to go? But that's not really what we've been seeing. I think it's an interesting dynamic to see that the tech names have been doing really well, but some of those retail and consumer discretionary names that everyone thought were going to get a really nice boost from the effects of cheap oil haven't really been doing quite as well. I mean, Apple comes in, reports a massive quarter, sells more iPhones than they ever have before, and I think that kind of shows you also that there's maybe some changes in the trends, the way that consumers spend their money, right? So
No
maybe they're
doubt.
going into more high-end devices and things like that, which is why we see those companies outperforming when, your traditional retail names and apparel and things like that have not been doing quite as well, when maybe the expectation was for a little bit more out of them. And there is a lag effect between that cheap oil and that money actually starting to come into the economy. So going forward through the next quarter, I think we'll really see in next quarter's earnings what the effects of cheap energy on the U.S. consumer really were.
Sure. Do you also are you looking at the strength in the U.S. dollar as having a going forward a negative impact on the multinationals? Any thought on that? Agree, disagree? Just again, just a thought on that.
Yeah, I absolutely, and you listen to the conference calls, of firms like McDonald's or
Sure.
any of the other large multinationals, and it certainly is a concern, and it's a concern of mine as well. I can be careful about my earnings plays and maybe focus on firms that don't necessarily have those operations, because I really think that the earnings story for this cycle was about the U.S. consumer. I think it's going to be about the U.S. consumer next cycle as well.
Okay.
So kind of focusing on the more U.S. based firms that are reporting, I think is a pretty simple way to leg out the risk of the stronger dollar if I'm someone who's looking to trade stocks on earnings, because it definitely is a concern. And anyone who says that they really have a read on what's going to happen, I think is not necessarily being completely honest with themselves, because the moves that we're seeing in some of these currency names are unprecedented, right?
Sure.
I
No,
mean,
no doubt. No
yeah,
doubt.
it's something that no one has seen before. So
Right.
to say that you really have a good read on it and are positioned well for it, I think is probably something that if someone has that thought, they should really consider and take a look at their book and see maybe where they can leg out some more of those risks, because very difficult to read, a lot of uncertainty.
No, I think that's a great thought. So let's dive in. What are some of the stocks that you're seeing that you're involved with. You're on the earnings side. Let's get down to the micro level, if you will.
Sure.
Um,
So one of my biggest positions and most profitable positions right now is Apple. I was long this one through earnings. As soon as they came out with earnings, I took profits, reestablished my position with a little bit of a longer time horizon. I'm long through March expiration. I have on risk reversals, bullish risk reversals in Apple through March expiration. The one thing that I want to kind of get avoid in Apple is the release of the watch. I think that's a huge, huge risk point for them. If the watch underdelivers or it's not what people were expecting, I think the stock probably heads back to its pre-earnings levels.
mm,
Investors want to see them innovate. They have all of this cash. If their first shot at truly new innovation falls short, I think people are really going to head for the exits. But between now and then, I am going to remain long the stock, and I would expect it to head higher. We had an upside target of around $130 by March expiration, which at the time seemed like a little bit of an aggressive target, but Apple looks like it's about to trade 126 this morning, so it's something definitely that's inside the realm of possibility.
great, great. And James, I know we're going up to the opening bell here, so by all means, if you need to. Uh, Let us know if you'd like to stay on by all means, and we'll go into some specific securities that are on the move this morning. I know you're involved in the trading end, so by all means, if there's what other names are you seeing that you're trading off of earnings, and you will continue to trade?
So one that I am long right now is Cisco. I'm actually trying to take some profits in it right now.
Okay.
They reported earnings last night, came in really, really strong. The stock's up almost 7.5% this morning. It's up about $2. The equity options market was implying an upside target for tomorrow's close, right around 28.5, and the stock's trading right around $29 right now. So it looks like it's going to perform every bit of that measured move target. Like I said, I mean, this is another one. Not really a name tied to the U.S. consumer. A big tech name, and it's coming in with a great quarter, and the stock is ripping higher here. And we've seen that sector just do really, really well. And it kind of took a little bit of adjustment from me at the beginning of the quarter, because I really did think that this was going to be the quarter that was all about the consumer, and not really been the case. It's not really how it's played out. So I've have long position in Cisco. Like I said, I was long Apple through earnings. I traded some of the other tech names to the long side and have done well with them as well. I'm also currently long Pepsi.
Okay.
I guess that would be considered more of a consumer discretionary name. Things like that have been doing really well too. Coca-Cola also came out with a really good quarter. So it's really interesting to see, kind of which names in that space are what you would consider, tied to the U.S. consumer in a big way, which ones have been working and which ones haven't. And I think we'll really get a good sense of what the winning sectors are going to be once we get through next quarter's earnings. Because like I said, there is a bit of a lag effect from that cheap energy actually putting
Right.
cash into consumers' pockets and them going out and spending it. Some analysts say it takes sometimes as much as 6 months. So we'll
Correct.
see.
Right. I mean, it does take time to filter through the cost structure of the organization. Absolutely. If I may, it seems as though you lean towards the more liquid names, if I may. Is this something that you typically do? You mentioned Cisco and Apple and Pepsi, and is this something that you really concentrate on in your portfolios in terms of equity derivatives, where you really are looking for liquidity, basically?
Right. So for catalyst events, if I'm going to put on a position ahead of earnings, then I'm going to want the name to be one of these heavily traded, very liquid names, because my holding period on these is going to be very short. Right.
Okay.
So for all the stocks that reported earnings this week, I put on trades that all expire on Friday. right? So I don't want to be in a situation where on Friday morning and all day Friday into the close, I'm scrambling to try and exit these positions in the options market to avoid assignment or expiration or assignment or exercise at the end of the day because there's no liquidity in the market. When that happens, when I put myself in a situation where I must exit a position and there's no liquidity, I'm just asking, to hand money over to the market maker
Correct.
to just
Correct.
give him some
Right.
free money, and I don't want to
Yeah,
do that.
absolutely. You're asking for a little. You're asking for a little pain.
Right, absolutely. I mean, when I look at kind of my longer term, more unusual options and institutional order flow based strategies, then I'm much more willing to take trades in less liquid names. Actually, I would prefer that the names are less liquid
Mhm.
uh, for those types of strategies because then the
Right.
institutional order flow is all that more significant.
Correct. Correct. And this is something that we pick up as well in the let's call it less liquid names. Certainly not not we typically don't pick out micro names, but certainly less liquid names. And when you have that those option trades or blocks, if you will, going off, it's certainly a signal. At least it may not be for the short term, but it may be same day, but certainly over perhaps even a swing trade, you can certainly have some opportunity there.
Right, absolutely. And I would say that the majority of my trades, of where to categorize them like that, would fall into the realm of swing trades.
Right.
At least in terms of numbers of positions, definitely have more in the shorter term catalyst type trades, but those are going to be my smallest risk positions. Anything that I'm putting a significant amount of risk into is going to be more of a swing trade, where I'm looking for kind of a longer term move, and that's what I'm in right now in Apple, and I also
Sure.
have a longer term swing on in GLD, which is I'm not a gold bug, but I like to have that long in my book in a
Sure.
very small capital outlay options position that should we see that big flight to quality or the quote unquote crisis trade come back on, I should benefit from that.
Sure, absolutely, James. And before we let you go, I know you're beginning to trade. One last question, and that is, send us off with a little bit of a glimpse into the future. Anything that's on your radar that you're a bit cautious about, perhaps a bit optimistic about, perhaps in a little bit more on the if you want a little bit more on the macro side and the micro side, anything that's on your radar that you're paying a really close attention to in the coming weeks.
Right. So in the coming weeks, I'm not. There's actually not one single event that I'm really paying all that much attention to. Once we're through, we're through the ECB announcement, we're through employment numbers for this month. We have some more macro data coming out, but generally when we're in a time like this where we're nearing the end of the earnings cycle and kind of seeing less stocks report in a day before we get ready for the next cycle to begin again, we're in an area that I kind of call like catalyst no man's land, right, where we don't really have too much that's driving overall markets, or we don't have as much coming in every single day data wise that's driving overall markets. So that's when I want to kind of remain really stock specific like this. I think that really what I'm looking forward to is the next earnings cycle, because by then that lag effect that we were talking about with the price of oil in the U.S. consumer should have played out already, and we'll really start to see who the quote-unquote winners and losers are from the price from cheap oil, right? And I think that's going to create really good opportunities for both long and short setups.
No doubt.
For traders out there, maybe just kind of following moves in individual names after earnings, because as we know, the initial move after earnings, that stock tends to trend that way until the next cycle starts. Statistically, the vast majority of the time. So
Absolutely. James, thank you for that. Folks, James Ramelli from keenonthemarket.com. James, thank you so much for joining us. It's been a pleasure. We learn a lot from you, and we hope to have you on again. We wish you a great day.
Absolutely. Thank you guys very much for having me. It's been real fun.
Thanks, James. Have a great day.
You too.
Folks, let's get back into into the presentation that we are monitoring specific stocks this morning. Certainly on oil, we have here the oil names that we're taking a look at, specifically on the underlying ETFs, ETNs. If you take a look at the OIH, that's a large one. Really, with oil being continuing to be in these levels, continuing to be low, really what's the impact on producers and specifically on the more macroeconomic side, the CPI and PPI data, the inflation indicators for central bankers, and that's something that we are keeping an eye on rather closely. Let's jump into specific stocks. On Barron's Online, they were positive on Halliburton, commenting oil services giant is quote-unquote taking full advantage of the oil route and should emerge stronger once the current maelstrom subsides, especially following merger with BHI. So again, positive on Halliburton. Getting into the insider transactions, we have PNNT, Penn and Park Investments. We had a total of about a $250,000 transaction there. SXC, Suncoke Energy, we had more than a $500,000 purchase by directors. We had WDR, Waddell and Reed Financial. We had over a $250,000 transaction by the president. RENT, Rent Track. We had over a $7 million total transactions, both from a 10% owner and a director. FSC, Fifth Street Finance, we had almost an $8 million transaction by Leonard Tenenbaum, who was the director. On Farm, we had over $100,000 transaction, combined transactions from two directors specifically, and also AST. We had a $500,000 transaction by the CEO. On Mad Money, we like to bring this up from Kramer, mentioned a plethora of stocks here, AWAY, BBT, KEY, to name a few. He is positive on Apple and GM. On the buyback, stock buyback programs, NSIT, $75 million share buyback. NTAP increases buyback by $2.5 billion. NBHC, $50 million stock repurchase program. TAL, new share repurchase program of up to 3 million shares. TCX, $20 million stock buyback. Specific stocks that are on the move, various news. And before we get into that, remember there's still the Leerink conference, healthcare conference. You'll see throughout the day we'll be mentioning who's presenting and if there's any specific moves in those securities. EXP, moving on a takeover of OWW. Obviously, we heard that this morning for $12 a share. GBNS initiates clinical trial on its Shiga toxin producing E. coli test. Teva Pharmaceutical, $1 billion debt tender offer. Zynga terminating 4% of total workforce. And also Zynga sees total pre-tax restructuring charges of approximately $3.1 million. NVIX, they had a PR on Ebola vaccine. And so that's what we have there. So let's take a check on where we are in the markets this morning. We have bear with us, we have the S&P futures higher by 8 points at 2073.75. We have crude oil now higher by $2.20 at $51.05. We have gold at higher by $5.50 at $1,225.2. We have platinum higher by $10 at $1206.30. And we have silver still below that $17, higher by 1.109 at $16.87. 10-year watching rather closely here at 1.986, still hovering around that 2%. On the larger stories here, we have the DXY, the dollar index, at 94.375, lower by 61.61. Euro higher by 0.0062 at 1.1369. Folks, thanks for joining us. This has been Unusual Activity, powered by FinancialJuice.com with George Avedon and Milton Marmonides.